From the current inflation issue caused by the Federal Reserve, through the 2008 housing bubble and the dot-com bubble before that, Michael Burry is now forecasting a worse crash. For today's video, we will be going to talk about Michael Burry predicts the biggest market crash. Interested to know about Michael Burry's forecast for the demised cryptocurrencies, his opinions on crypto speculators, and whether or not the government would ban cryptocurrencies? Just keep on watching. Cryptocurrencies' intrinsic value. As you already know, cryptocurrencies are inert assets that have no fundamental value. This indicates that the price is not controlled by underlying cash flows, but rather just by what the next buyer is willing to pay for it, which is known as speculation. Although you can make the same case for gold or cash, you already know that these items do, in some sense, have a value that is attributed to them because of their significance to the larger financial system. Even though it is unproductive, gold has been used as a financial asset since virtually before the birth of Christ, and the dollar enjoys widespread acceptance as a reserve currency. On the other hand, Bitcoin has been around for just over 10 years and is primarily used for speculating. At the Berkshire Hathaway annual shareholder meeting this year, Warren Buffett made the exact same point. Will governments block it? Burry has always believed that if cryptocurrency becomes too popular, governments will simply act to destroy it. This has been a widely held attitude among many in the banking industry. He remarked, quote, in his opinion, "Decentralized cryptocurrency has an uncertain long-term future in a world of legally violent, uncaring centralized governments with a vital interest in maintaining currency monopolies." He's not short Bitcoin, since anything is possible in the short term. Although it hasn't had a significant role in the previous crypto market crashes, this does have an impact on the long-term thesis of crypto. The fact of the matter is that governments enjoy having control over their money. Therefore, if there is anything that could undermine that control, they will want to eliminate it, as we have already seen with China's recent ban. But since it's currently only used as a financial asset and not really as money, governments haven't generally cracked down on it yet because it doesn't pose a very huge danger. However, in the long run, if Bitcoin or Ethereum did start to acquire significant traction and, threaten to be an everyday currency that people selected over, say, the US dollar, the government would possibly use its power to smash it in order to maintain control over its economy. This is a stance that macro investing guru Ray Dalio has also taken. Michael Burry predicts the collapse of cryptocurrencies. Burry made a bold forecast that completely went unnoticed, that cryptocurrencies were in a huge bubble and were about to burst. He added afterward that FOMO parabolas don't resolve sideways, and that, quote, "cryptocurrencies are a bubble that presents more risk than potential. History hasn't altered, so when cryptocurrency drops by trillions of meme stocks, drop by tens of billions. Main Street losses will be comparable to those of tiny countries. Unfortunately for many who invested substantially in cryptocurrencies, that prediction has come true. Bitcoin has plunged by 57% this year, Ethereum by 70%, and even Elon's favorite Dogecoin has dropped by 59%. The market capitalization of Bitcoin, which was $891 billion at the beginning of the year, is now $369 billion, a decline of $522 billion in roughly 6 months. It is around the same magnitude as Ireland's GDP. Burry was correct that losses are comparable to those of tiny countries, but that wasn't the only thing he had to say about cryptocurrency. In fact, he's been tweeting a lot about it lately. Now, it should be recognized that Burry is not anti-crypto. He really believes that pretty sensible given the open ledger system. That is the blockchain and the finite nature of many of these coins. He said himself in 2021 that he doesn't despise Bitcoin and added that he thinks the majority of supporters are actually right about why it's important at this time in the history. Burry has undoubtedly been a critic of Bitcoin over the years for three key reasons. Despite these arguments, two are related to the principles underlying cryptocurrency itself, while the third is related to how investors view it. Bitcoin as an inflation hedge. Since many of these coins, like Bitcoin, will only ever be produced in a finite number, they should perform admirably versus the dollar during periods of inflation, like the one we're currently seeing. When the Federal Reserve prints a lot of money, both the government and people spend a lot, driving up inflation. People only say this in relation to gold because it is a limited resource and hence usually performs well during times of economic unrest. Unfortunately, for global currencies like Bitcoin, this theory has not actually come to pass. This shows that, at least for the time being, Bitcoin is viewed far more as a speculative game than as a legitimate financial asset. Investors have been pulling their money out of cryptocurrencies rather than investing more as the economy has gotten worse, and they have begun to feel the pain. Burry recently brought attention to this by tweeting, quote, "Are we sure Bitcoin is not just another risk asset in the Nasdaq 100? Unquote. As you can see from the chart he included with that tweet, during the previous 6 to 7 months, Bitcoin's performance has been almost identical to that of the Nasdaq. What does this indicate then? Of course, the large inflation American tech companies that are now falling as speculators exit the market are listed on the Nasdaq. Because of how closely Bitcoin resembles the performance of these stocks, it is clear that, at the moment, price movement in cryptocurrencies is largely driven by speculation, just like in the case of those stocks. As a result, Bitcoin is currently failing to stand out from the crowd and maintain its reputation as an inflation-proof asset. Burry's thoughts on crypto speculation. It has only ever been used as a gambling machine, and the next most avaricious person with a dread of missing out has always set the price. He noted that Bitcoin is a speculative bubble that presents more risk than potential when he tweeted last year that he saw the biggest speculative bubble of all time in everything. Retail investors are only being attracted by hype conjecture prior to the mother of all crashes. History hasn't altered. FOMO doesn't resolve sideways, precisely what has occurred thus far. Since cryptocurrency is fundamentally speculative, investors are finally realizing that it's possible to lose money when you gamble. Doesn't believe this will end soon either. In a recent tweet, he paraphrased Tom Siebel as saying, quote, "I don't think this is going to be over until everybody swears they'll never own an NFT. They will never own crypto, and they'll never own a technology stock," unquote. Burry has been fairly negative on cryptocurrency over the past year, and his main justification is that the fundamentals will always prevail. Since it has no fundamental value, the market's appetite for speculative activity always determines its price, and because of this, crypto is a rather simple pass for anyone with a long-term value mentality. Everyone who claims that Ethereum will replace the US currency in 2 years or that Bitcoin will reach $100,000 in 2 weeks on YouTube and other financial tweets. Essentially, you should disregard them and make investments based on your own judgment. What can you say about Burry's predictions about the market crash? Which of his viewpoints do you think will really happen? Please let me know by leaving a comment below. And if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video.